What's up, gang? Happy Friday. Hope you're doing well. Hope you've had a productive week. This is your weekly rate update. Taking a look now at our 30-day rate movement, courtesy of Mortgage News Daily, we're about 0.5% above where we were 30 days ago. But over the past couple of weeks, you can see we've been bouncing around that 7% mark. Sometimes we're above 7, sometimes we break beneath 7%. But the market seems to be keeping us around that 7% rate. So when we're talking about what the average rate is on a conventional loan with 25% down with a 780 plus credit score, it's going to be around 7%. If you're talking to somebody that's thinking FHA, we're going to be much closer to 6.5. I want to illustrate for you why we're seeing a movement in rates. We could look at this chart, and this chart shows us what Wall Street thinks the Fed's fund rate will be in October of 2025. Now, the reason why we're looking this far out is because that's what Wall Street is looking at. That's going to affect rates for today. It's not necessarily about what the Fed is going to do in the upcoming meetings, if they're going to cut, if they're going to hike, if they're going to hold. It's going to be about what's going to happen in the future. So right now, if you take a look at where Wall Street thought the Fed was going to be landing in October of 2025, which is the purple line, you can see that the highest average is going to be at 3.5%. Going to today, you can see that has shifted over to the right, which is the green line. Wall Street's thinking that is going to increase by 0.5%. This means it's going to cost banks more money to borrow money, loan money, and that's going to increase the cost of borrowing overall, which has a trickle down effect to mortgage rates. So if Wall Street's perceiving that the cost of borrowing money is going to stay higher further out, that means mortgage rates are going to stay higher for longer. So keep in mind, guys, when we're talking to our clients and we're trying to explain to them what rates might do at the moment, currently at this moment, it looks like we won't see rates coming down dramatically within the next few months. So keep that in mind, that when you're talking to clients, educate them, let them know that Wall Street is expecting rates to be a little bit more elevated for a longer period of time than what they thought maybe even a month ago. Hope you guys have a wonderful Friday. Hope you have a great weekend. I'm Brian McIntosh, Mortgage Loan Officer with Homeowners Financial Group. I'll talk to you later.